Welcome to the Crypto Breakdown Show, your guide through the fast-moving world of digital assets. We break down the latest market moves, industry trends, and the big stories shaping the future of crypto. Just a quick reminder, this isn't financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. All right, let's get started. Recapping some of the top news from October 12th. Today, we're unraveling a fascinating tapestry of market dynamics, technological shifts, and geopolitical whispers that are shaping the crypto landscape. First up, let's talk about the big picture, the kind of macroeconomic rumblings that send ripples through all markets, including ours. We've been keeping a close eye on the ongoing trade discussions, and it seems there's a clarifying note from China's Commerce Ministry. They recently stated that their rare earth export controls are not outright bans, but rather lawful security measures. They assure us that eligible civilian exports will still receive licenses, suggesting an intent to refine their control system rather than halt trade entirely. This clarification comes amidst heightened trade tensions with the US, which has been hinting at new tariffs and software controls. It's a subtle but significant distinction that could prevent further escalation and, surprisingly, even brought some green shoots on China, which seemed to lift crypto in Sunday action, demonstrating how interconnected our digital world is with traditional global affairs. Moving from global policy to market pulse, let's cast our gaze on the immediate future. Is a Q4 crypto surge on the horizon? Many analysts believe so. We're seeing a powerful alignment of historical trends, the Federal Reserve's shifting stance on interest rates, and soaring demand for crypto ETFs. Bitcoin, in particular, has a historical average of a whopping 79% gain in Q4. And it's not just Bitcoin. Major altcoins like Ethereum, Solana, and XRP are also showing robust growth, fueled by significant upgrades and increasing regulatory clarity. This signals a potential for widespread gains as we head into the end of the year. However, it hasn't been all smooth sailing. We need to address the recent turbulence. Just a few days ago, on October 10th, the crypto market experienced a flash crash that saw altcoins take a significant hit. Wiston Capital reported that altcoins plummeted by about 33% in just 25 minutes, wiping out a staggering $560 billion from the total market value since October 6th. Bitcoin, interestingly, showed greater resilience, holding up relatively better than its altcoin counterparts. Charlie Erith, founder of Wiston Capital, attributed this sharp downturn to a leverage cascade, amplified by other external factors. He's now closely monitoring key market signals before diving back into higher-risk assets. In the wake of such volatility, ensuring user protection is paramount. Binance, one of the largest exchanges, has stepped up to compensate users affected by a crash in wBETH, BNSOL, and Ethereum's USDe on their platform. The crash was linked to Binance infrastructure issues, which prevented market makers from stabilizing prices of these wrapped tokens during periods of high volatility and liquidation. In response, Binance is wisely shifting to conversion ratio pricing for wrapped assets to ensure more stable valuations during market stress. It's a crucial move for user trust and market stability. Now, let's shift gears and talk about the future of interaction within our digital world. A major pain point for newcomers and even seasoned users is the sheer complexity of Web3. There is too much friction in Web3 for newcomers, and we really need to fix it. The biggest hurdle is the constant network switching between different blockchains, creating a fragmented and often frustrating user experience. This complexity is driving away a significant portion of new users, with reports suggesting 80% abandon crypto within 90 days. The proposed solution? Chain abstraction. Imagine a world where the underlying blockchain becomes invisible to the user, allowing for seamless interactions across all chains with a single click through universal layers and interconnected applications. This is the future we need for true mass adoption. Finally, let's ponder the long-term vision with a bold statement from a prominent voice in our space. Tether CEO Paulo Ardoino recently asserted that Bitcoin and gold will outlast any other currency. He believes these two assets are superior long-term stores of value. This isn't just a philosophical statement. It reflects Tether's strategic policy of using its operating profits to acquire Bitcoin for its reserves and actively increasing its gold backing through its XAUT token and potential investments in the gold industry. While a majority of Tether's reserves remain in liquid assets like U.S. Treasuries, these moves clearly aim to strengthen Tether's balance sheet and underscore a deep conviction in the enduring value of these fundamental assets. We've covered everything from global trade and market surges to flash crashes, user protection, technological innovations, and the enduring value of digital gold. The crypto world is dynamic, ever-evolving, and always offering something new to learn. That's a wrap for this edition of the Crypto Breakdown Show. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you enjoyed the episode, be sure to like, subscribe, and share it with someone who's crypto curious. Thanks for listening, and remember, no matter where the charts go, stay grounded, stay informed, and stay crypto smart. Until next time.